What's up, everyone? It's Caddy with MoneyVest. So today is the day. We've got inflation numbers coming out in less than an hour. So CPI numbers in the United States are going to be scheduled for 8:30 a.m. Eastern. Hope you guys are ready. I'm ready as well. We've got the markets to take advantage of. Of course, we'll see what happens after the numbers come out. I'm going to break down the expectations. We're going to talk a little bit about the previous report and, of course, go over the consensus estimates and, of course, wait for the numbers to come out and take a look at the market's reaction as well. As you're joining in, make sure that you drop a like and of course subscribe. Our goal for this live stream is to get up to at least 1,000 likes. It's going to be a tough goal. It's going to be very, very difficult to achieve, but we'll try our best. We'll see if we can actually do this to get up to at least 1,000 likes. We'll see how many people join in. And of course, we're going to start a poll basically asking you guys the consensus for the CPI numbers and what that number is going to look like. So let me just go break down the actual consensus. Then we'll take a look at the poll here and construct our poll for everybody joining in. You can participate and tell us your prediction for CPI numbers that again come out in less than 35 minutes now. So it's going to be very, very important. The markets, we are ready. SPY right now is pushing up slightly. It's more or less flat right now. QQQ is up over 9 basis points. And the Dow Jones is also slightly down about 5 basis points. So very, very flat markets. That's exactly what we expected because everyone's waiting for the inflation report. So the consensus 0.6% on a month-over-month basis for headline. Year over year, 3.6% is going to accelerate a little bit. That's expected on the back of energy prices and core. When you exclude for energy and food, expected to be 0.2% month over month, very similar to what we saw last month. But the big significant decrease is going to be on headline and year over year core, which is going to be coming down to 4.3% from 4.7. So that is where the market's focus is going to be, not so much on headline, but on core, because core is really what the Federal Reserve watches, and that's really what dictates the interest rate expectations and, of course, potential hikes from the Federal Reserve as well. So let's just do this. We are going to do, everybody has coffee or tea, right? Thank you so much. Yes, so asking everybody, grab yourself a coffee, tea, whatever it is that you prefer. And we are going to be ready to go live here with inflation numbers. So CPI and core CPI, we're going to do above consensus estimates. So meaning that that is going to be above 0.6% month over month, above 3.6% year over year, and cores also come in higher or below consensus estimates, or we're going to do at consensus estimates. And you know, the bottom line really is, as Tom Lee pointed out in his research report, and what they basically found, that in the last 6 reports that we have gotten, or actually the last 10 reports that we have received for CPI, so it's going back 10 months, the markets have rallied 5 out of 6 times on the days then the consensus was wrong. Inflation numbers came in hotter than what the expectations were. So in other words, even if we do come in hotter than what the expectations are, the markets 5 out of 6 times in the past have rallied on that news and have powered through. So we'll find out if that's going to be the case today, because we know that when it comes to interest rates, you know, the Federal Reserve is penciled in one more rate hike, but the market's very much determined that there is not going to be any more rate hikes, meaning that we are done. And this is where we're going to be. So if we come over to the Fed Watch tool, over a 93% probability that we're going to keep rates where they are. And of course, the probability shows that rates are going to stay here up until May, and we're going to start seeing cuts in June. So, well, the interesting thing is 1, 2, 3. Wow. Okay. So the market's now only pricing in 3 rate cuts instead of 4. That's actually quite interesting, because for the longest time, the markets continued to price in rate cuts of 4 or more, and now we are down to sub 4, meaning we are, for the first time, as I'm seeing it, and I've been tracking this data for a very long time, we are now down to only 3 rate cuts. And you know what the interesting thing is? Who can spot the interesting thing? What is the one discrepancy that is gone? I want to ask everyone, and I want everyone to participate. So comment in the live chat if you can actually spot what discrepancy has been solved between the market's expectation and the Federal Reserve and what they penciled in their summary of economic projections. Brownie points for person who gets it, and SoFi shares for me. But let me know if you know the answer to that question in the live chat. And again, the question is, what discrepancy has been solved between the market's expectation of interest rates and the Federal Reserve's expectations of what they've penciled in their SEP, Summary of Economic Projections. So Bas says higher. Not quite, but let me see if anybody else gets it. Everybody else want to take a guess? Anybody else wants to take a stab at this question? And you know what? If you get it right, I will go over a specific stock for you in this live stream. So you can come up with any stock and I'll go over fundamental technicals for that company. So take a guess, right? Take a guess. I meant no rate hikes. Not quite, because, I mean, now we're going to get into that process of elimination, but not quite, because the market was already pricing in that. And the Federal Reserve actually has already penciled in another rate hike in their SEP. I want more people to participate. We got 120 people watching. I need 128 responses, at least some guesses thrown in there, so that we can have a lively discussion ahead of the CPI numbers and ahead of the interest rate meeting on September 20th. So that's going to be on September 20th. So FOMC is going to be meeting, and we've also got the SEP. So Eli says yields are up. So yes, yields are up, but that's for a different reason. But there is one specific, and you have to have an understanding of what the Federal Reserve penciled in for 2024. Again, I'm giving you a huge hint here. What has the Federal Reserve already talked about with respect to the terminal rate in terms of interest rates? Let's see if there's anyone who can pick up on this and who can get it. So we'll do an audio check 5 minutes prior to the inflation numbers coming out, and we'll listen on CNBC, and then we'll take a look at the market's reaction. And then I've got the BLS studio, BLS right over here, and we'll take a look at the numbers live and the PDF after it's reported at 8:30. Okay. So one rate hike in 2024. Nope, not quite, because there's no rate hikes in 2024 right now. There's nothing's been priced in. Unemployment, nope, higher for longer, not quite, higher for longer, no longer higher than 500 basis points. I guess J is close. Okay, I'll give you a hint. So look at the terminal rate after the rate cuts. What is the market pricing in, and what has the Federal Reserve penciled in, right? So again, that's about literally me blatantly telling you guys what it is. Inflation when oil prices are still up. Yep, so oil prices are higher, so they have been pushing higher. So since May, they're up over 40%. I did a video on this yesterday. So when will we be seeing shelter coming down? Roshan's asking. So I'll get to that in just a minute. But you know what? Let's just go over Federal Reserve's SEP from their previous meeting. So meeting and calendars, you come down. The last SEP was back in June. So if you come over to their projection materials, so this is the discrepancy that's been solved. For the longest time, the markets were pricing in 4 rate cuts, and they were pricing in from 525 and 550 basis points, 4 rate cuts. That's every rate cut is 25 basis points. In totality, there was 100 basis points worth of cuts. So the markets were pricing in that we're going to come down to 525, 550 minus 100, right? So 425, 450. So markets were originally pricing in that we're going to come down to this right here. This is going to be that level for 2024, which if you take a look, close notice here, we're still very close, 25.6% probability and 26.8% probability. So we're very, very close. It's tight competition between those two probabilities. So markets are right now pricing in 3 cuts. Originally, they were pricing 4 cuts, and 4 cuts also is very close, right? It's borderline. But if you take a look at where we are now, 4.5 to 4.75, if you come back to their SEP and what the Federal Reserve penciled in, so this is the discrepancy that's been resolved now. Because if you come over to federal funds rate, this right here, and take a look at the 2024 number, right alongside this, 4.6. So there we go, 5.6 to 4.6, that's 100 basis points. That's 25 basis points per cut, that's 4 cuts. And 4.6% is what the Federal Reserve themselves have penciled in their SEP, and the market is also expecting rates to be between 4.5 and 4.75. So 4.6 lands right in the middle of 4.5 to 4.75. So that's a discrepancy that's been solved from the market. Okay, what is one discrepancy that's not been solved? Let me ask you this. What is one discrepancy that has not been resolved between the market and the Federal Reserve? Again, I need more guesses. I need more answers. If you have any idea, just let us know in the comments. What is between here and what the market is pricing in versus what the Federal Reserve is telling us? What is one thing that's not resolved yet in terms of that discrepancy? Milan says rate cut. Well, we just went over the rate cut, right? We just went over the rate cut, but what is the one thing that is still? That's the only thing left, by the way. That's the only thing left that the market still needs to resolve. So let us know. Just joined in the car driving, Milan says. Yep, so you're probably listening to what I'm saying and probably not watching, so that's okay. You get a pass on that question. But the bottom line is I'm not going to get SoFi shares because you didn't get it right. So yeah, let us know. Let us know in the live chat if you know the answer to this question. Again, this time it's the other side. We're asking what is the one discrepancy that's not been resolved between the market and the Federal Reserve. Quick update on the SPY, very flat. QQQ is flat. Dow Jones is flat, so there's nothing really going on in the market right now. The bond market's also very muted, up over 0.5%. We're back over 4.3, but not really moving all that much. Oil needs to go down, hurting consumers. Yep, so that's a big issue. That's a big problem. So obviously we have to pay close attention to where oil prices are and where they're potentially going to go. So, but yeah, let me know the answer to the question if you know. I'm waiting for more people to participate, for more people to type in the live chat. Housing is still expensive, Eli says. Yeah, I mean, shelter prices are still higher. They're still up, no doubt. But again, the question is, in terms of this meeting probabilities, what is it the market's pricing in terms of rates, interest rates, that the Federal Reserve is telling us otherwise? Okay, there is a discrepancy here between what the Federal Reserve's expectations are versus what the market is expecting with respect to interest rates. So employment numbers, not quite, because again, we're talking about interest rates right now. So interest rates are going to be over here. And this is, again, what the market's expecting. Unemployment, there's not really any expectations from the market about unemployment right now. Unemployment right now, 2024, they're expecting 4.5%, and we don't really know what the market's pricing in for next year. But with respect to interest rates, yeah, we'll get to that poll in just a minute. We've had over 91 votes. We want more people to participate and vote in that. So Matchbox has rate of cuts. So not quite. Market have not dropped as Fed wanted it to. Market is pricing in rate cuts by the end of the year. Fed says they are not coming. So good guess, but not quite. Market is not pricing in any rate cuts by the end of the year, because you'll notice that 2024, we're expected to see rates at where they are. So you don't see any rate cuts until June of 2024, right? So it was a good guess, but not quite. Timing of the cuts, time of the rate cut question. So again, the question is, there's one discrepancy left between the market and the Federal Reserve with respect to interest rates. And it's pretty much shown over here. There is one disagreement, I should say. The market's pricing one thing and the Federal Reserve is telling us another. So when it comes to the median 2024, and let's just go over 2023, right? 2023, they're expecting the federal funds rate to be 5.6%. And look at what the market's pricing in, right? It should be pretty obvious now. Yeah, so it's one more rate hike. That's the thing, right? One more rate hike. One more rate hike is what the Federal Reserve has already told us, but market is not buying it, and market's expecting for us to see a pause all the way through 2023, most of 2024, and then start rate cuts in June. Because again, if you come over to the S&P, 5.6% is their number for 2023, and market is sitting at 5.25 to 5.5%, right? So another rate hike would be putting us over here at 5.6. So that's a discrepancy. Once that gets resolved, we are going to be tight. We are going to be literally, the market and the Fed would be aligned. Oh, yeah. Now everybody wanted to say a rate hike. Milan said, yeah, more hike. I wanted to say that. I couldn't. I just parked. Sure. Yeah, everybody's thinking, yeah, I want to say a rate hike. But no, that's the discrepancy. And the good thing is the market has not really seen a significant, move from the Federal Reserve's rate hike and from the SCP and everything, because we've seen 2023 how strong of a rally it's been and how strong the markets have been on the back of consistent rate hikes from the Federal Reserve and disagreements and discrepancies between the market's expectation and the Fed's. It's continued to kind of power through, and I think that is going to continue, but it may not be the same set of names that take us to higher highs. So that's something to keep in mind. But yeah, we've got less than 20 minutes now for the inflation numbers to come out. Make sure that you drop a like. Let's see if we can at least get up to 100 likes, maybe not 1,000, but at least get up to 100 likes, and share this live stream with anybody else you think might be interested in the markets or investing and trading. And just invite everyone, as many people as you want, and we'll take a look at the inflation numbers, the CPI numbers together, and of course go over the market's reaction as well. Okay, so 48% of people expecting the consensus estimates to be lower than the actual. So in other words, the actual numbers to come in above the consensus. So almost half of you are expecting a hotter print on inflation, which doesn't surprise me considering how much oil prices have moved up in the last few months. And then 17% expecting below consensus and only 35% at consensus. So I guess majority of people are still expecting either at or below the consensus for inflation. But that's going to be a different poll than if I were to ask you whether the markets are going to move higher or lower. Because even if we do come in higher or above or below consensus, that doesn't necessarily mean the markets are going to be higher or lower reacting to the inflation numbers. Because a very significant print, a hotter print, raises that concern for rate hikes, but also raises concerns for recession, which eventually raises concerns for unemployment, which creates an environment for lower interest rates. So it's just how far out is the market willing to think, right, in terms of that forward looking. Because again, if hotter inflation, if inflation starts to reaccelerate and puts more pressure on the economy, the short-term concern is going to be, yes, Federal Reserve raises interest rates. The longer-term concern is going to be, this is going to lead to unemployment, recession, potentially rate cuts in the future, and that's more bullish for the market. So it's kind of like a timeline game where the market's going to be making a decision whether to look 6 months far out or 12 to 18 months far out. Bass, markets will go lower. We are due for a September drop, he says. So time pass, bro, just bought your Patreon $10 tier. Can you make the fundamental videos or option videos to $10 tier? By the way, your Patreon videos are awesome. Thank you so much. I appreciate that. And yes, I will definitely think about it. The thing is that there are a lot of educational content and tutorials on fundamental, technical analysis, and options trading that is for obviously members only. So I'll definitely think about it. But thank you so much. I appreciate your comment and welcome on board. We're very happy to have you. So, okay, I've got another video coming out on a very nice IPO. It's not ARM Holdings, but I've got another IPO video coming out for a different company, which we will talk about separately. But ARM Holdings is going public today. We'll see what time they go public. Maybe there's going to be enough time for us to do a live stream for that IPO as well. But bottom line is, guys, please be careful with IPOs because, the thing is that private valuations are almost always inflated compared to public valuations. And not only that, the underwriters, which are a bunch of banks, right? We're talking 10, 12, 15 different banks, depending on how big the IPO is. Sometimes you can even have 20, 25 different underwriters. Of course, there's a lead runner, whether it's Goldman, whether it's JP Morgan, whichever investment bank is doing the IPO, they all split the fees. And the fees comes off of a percentage of the amount raised. And the amount raised is directly correlated with the valuation, right? So if the company is valued at, let's say, $100 billion and they're raising 10%, that's $10 billion, versus if they are still raising 10% and the valuation is at $50 billion, they're only raising $5 billion. So their compensation is kind of directly tied to the percentage of the amount raised. So definitely be careful because valuations do get inflated in the private markets, and sometimes you can unfortunately get stuck holding the bag, as it's happened with so many different IPOs and SPACs all in the last 3 years. And on average, I mean, statistically, they've been down like on average 47% from their opening price. It's not a coincidence, right? I mean, if almost all companies that have IPO'd, only Airbnb and Snowflake are up in triple digits from their IPO price. Or Airbnb here, let me see. So Airbnb actually is flat. It hadn't really gone anywhere. And Snowflake, because that statistic study did show, okay, Snowflake also is down 20 or 29%. There we go, case in point right here. Most IPOs are selling off or down. ARM IPOing at a premium price, couldn't agree more. I think it's really high. So yes, CASY, I'll do an analysis on that very soon. Milan, we'll take a look at that company. But guys, make sure that you drop a like. I would really appreciate it. The reason I'm asking you is because the algorithm pushes this live stream out to more people. More folks can join and discuss inflation and markets. So it's going to be beneficial to you as well. So make sure that you drop a like. Let's see if we can at least get up to over 100, 150, 200. Right now there's 260 people watching. Thank you so much. Quick take on the S&P. 4 basis points, not a lot of movement. QQQ is up 12. The Dow Jones is flat. And the yields are just over 4.3%. Volatility, again, very muted. There's no move, trading up over 33 basis points. Oil prices. This is something I wanted to mention. Look at where we are. Almost 90 bucks a barrel. That's a big deal. That is a pretty big deal because this is going to put an impact on inflation eventually. And you can come over to the monthly chart and you can see that we are up over 6.7% for the month of September. Now, this is not going to be reflected in the report that we're just getting in the next 14 minutes. The reason for that is because the report that we get today is for the month of August. Oil prices are going up in September, the way they are, up 7%. And AAA gas prices, I think, have also, in some areas, peaked over $4 a gallon again. As unfortunate as it is, we haven't seen a lot of headlines for this very issue because guess what? 2024 is a political year. It's an election year. And oil prices going up, gas prices going up. Nobody wants to see that as a headline. So in my opinion, I think there is a political angle to why there hasn't been a lot of coverage to the fact that oil prices are up 40% from May. And gas prices at the pump are also going up because of that very reason that I just mentioned. But that being said, eventually it is going to put an impact on the wallet. And Kevin, 24-month badge looks incredible, man. I think you're the first person to get it. 24 months. Can you believe that? 2 years. Special shout out to him, man. Thank you so much. You've been a very loyal subscriber and a member, so I appreciate you. Eli, Apple releasing a new phone. Yep, so they already did that yesterday. iPhone 15, 15 Pro, 15 Pro Max. The price difference is quite crazy though in different areas. I was planning on getting an iPhone in India, but the price is just insane. It is 40% more expensive in India than it is in the US, and about 25% more expensive in India than it is in Dubai. And what I can't understand is they're making iPhones in India now. They're manufacturing them in India. There's 2 brand new Apple stores. So these are official stores, and they've also moved part of the manufacturing and assembly away from China over to India, and they're still expensive. Like, it was one thing if you were importing all these phones, so you have those excise duty taxes and whatnot, but now that you're making the phones in India, I was expecting for them to be a little bit cheaper, but they're still charging a premium. Krishna, I have 13 Pro Max. Should I get a 15 Pro Max? I mean, it really depends on your needs, right? I mean, depends on what you are looking to do. I'm definitely getting the 15 Pro, not the Max, because I like the size for the Pro. And I think there's huge upgrades in the camera. And it makes sense for me because I'm doing it after 4 years. I've had the 11 for 4 years. So I went from the 7 to 11 to 15 now. So I do it every 4 years. So I'm excited, but really depends on your upgrade cycle, right? Do you like to do it every 2 years, every 4 years, every 6 years? So JT says, but you have money, caddy, so cost shouldn't be a problem. Not really, no. I mean, when it comes to spending, I live like a student. Literally, when it comes to spending and expenses, I try to live literally like a student. Like I'm on a budget. Like I've got a very tight budget, and I have every single penny. Like if you were to ask me, every single penny is accounted for, every single one of it, and I could tell you like where every single one of them went, because I've got like this massive spreadsheet that I track every single day, and putting down every single dollar on it. So yeah, I mean, I'm not spending wise. I'm super frugal. At least I try to be, and I'm not just blatantly gonna throw money out. Okay, any analysis on TSMC, Alibaba coming? If Nvidia is doubling its revenue, it would be a buy from TSMC, and TSMC earnings will also improve drastically. TSMC current PE of 15 while Nvidia is 100. Yeah, so I think TSMC has a lot of potential. There's some geopolitical tensions around Taiwan. I think Intel has been underlooked quite a bit. It has performed really well, right, in the last few months here. Since February, the stock's up 57%. So it's doing obviously a lot better. They're building these manufacturing foundries in the US. My question again is going to be the margins. I think Intel's margins are going to compress because production in Taiwan and Korea is a lot cheaper than compared to the US. Wages are significant in wages compared to that in Taiwan and Korea. So I think that's going to be a bit of an issue, but Intel is also a huge competitor to TSMC. I'm also going to be doing a video on global foundries. I think this is another company that we must look into from a fundamental analysis, because as there's going to be significant more demand for chips and semiconductors, there's only a few players. There's a handful of players that actually make chips, right? It's TSMC, Intel, global foundries, maybe a couple more that may not be as popular, but there might be some. There's few that I've actually started buying. So HTL Technologies is a company that I actually started a position in India. Mentioned this in a Discord a couple of days ago, I think earlier this week or last week. This is also a huge manufacturer of chips. And NVIDIA just partnered with Reliance. Reliance is the biggest company in India. They've got so many different businesses. They also partnered with Tata Motors, which again is another big company in India. So bottom line is chips. The demand for chips is going to be significant. So I have no doubt in dollar cost averaging in those. Haas, yeah, no, I mean, so that's the one thing, right? I mean, taking my whole family to Dubai, that's one thing that, when it's, the rule that I have is be frugal with yourself, generous with others. That's the rule that I have. And that's also from the book Meditations, which is a little bit different. Be strict with yourself and more tolerant of others is what Marcus Aurelius says. But I've also kind of taken that connotation in the financial world. Be frugal with yourself and generous with others. And that is to say that I don't mind spending money on other people. Like if I'm taking you out for dinner, I'm definitely going to take you to the best place. We're going to have a good time. But if I'm going to go myself, I'm probably going to pick like a very, very small like sandwich or shawarma place or something. So that's how it goes. So I don't mind spending money on my family, on my friends, on all of you guys if I ever come to see you. But with myself, I mean, I don't really need it, so I'm happy with, content with what I have. So that's the way I look at things. But okay, CPI numbers coming out in less than 8 minutes. Consensus 46%. CPI numbers are not leaked. I know this happens sometimes where somebody from Wall Street Bets or something on Twitter starts trending with a CPI report. They kind of go on Adobe PDF and edit some numbers and make it seem like it's been leaked. But I doubt it. I doubt that it's leaked because markets are not reacting, right? If it were, markets would be reacting. Right now, SPY is flat, QQQ is flat, Dow is flat. The yields are pushing higher though. They're back over 4.3%. So, Ken, you should make a video about yourself so you can know you better. Well, I feel like you guys know me a lot better already. I think I've been doing this for over 3 years. I think you guys know me to a great degree. But yeah, I mean, I'm happy to share more. I mean, you can always ask questions, and I'm happy to share more. So likes for the video, please, even if the news is negative. TMF DCA. So we'll do that, cool, very soon. I know you ask me about TMF almost every day. Milan, Kat, are you meeting up for lunch or dinner next time? Whatever you prefer. I don't eat lunch, so if you want, I can take you out for lunch and I'll just have my tea. But For dinner, I mean, I only eat dinner, so dinner would be preferable. But we can also do lunch. You can do lunch. I can do my tea or coffee. But no, when it comes to TLT and TMF, what I would say is that there's a lot of supply. I did a video yesterday going over the issuance of corporate bonds, and that actually is a huge indicator in itself of why companies believe that their interest rates are going to go higher, because they wouldn't rush. September, by the way, believe it or not, has been one of the biggest issuances of corporate debt months. $120 billion raised through the sale of debt. And companies wouldn't do that. Like their CFOs wouldn't do that if they did not believe rates were going higher. Why would they lock in rates right now if they thought rates were going lower in the future? Because they don't. So that's another huge indicator in itself and a market signal that, okay, in the foreseeable future, 6 months, 8 months, 12 months out, maybe, just maybe, the market and companies don't expect rates to be lower. If anything, they expect them to be at the same level or higher. And for that reason, I mean, there's so much oversupply of debt, both from a corporate side and government side, that, I mean, prices are going down, yields are going higher. So I think it's going to take some time for us to normalize until the market absorbs all that debt. And, you know, right now the appetite isn't really there. Or even if it's there, it's going to take some time for the market to stabilize with its appetite for absorbing all that debt that's hitting the market right now. So we have to wait until that happens, until that process kind of flows through, and then eventually I will start DCing into TLT, TMF when I do expect for rates to be cut down. Okay, so we are ready. 400 people watching. Make sure that you drop a like, guys. I really appreciate it. I'm gonna do an audio check here. And then I'm actually going to pull this out so that we can take a look at the markets and, of course, listen to this at the same time. And let's do that. All right. So just going to zoom out a little bit here. And we are ready. We are ready, folks. Inflation numbers for the month of August 2023. This is it. So we're going to put QQQs here, SPY over here. A market's about as flat as it gets. This is the flattest market prior to the numbers coming out. So hope you guys are ready here. Asif, thank you so much, but I cannot let that happen. If I'm meeting a subscriber, it's always going to be on me. So it's always going to be me taking you guys out. So always remember that. If I'm meeting you, you guys have done enough. Trust me. You guys have been part of the journey. You watching content, subscribing, liking the videos. That's all I ask in return. But if you're going out, it's always going to be on me. And yeah, so if you would love to do that, just let me know and, you know, message me on Discord or email me or whatever, and we'll plan that out. All right, so less than 3 minutes, folks. Less than 3 minutes. I'm excited for the CPI. The consensus is still very much that we're going to be at or below the consensus expectations. Although 47% do believe that it's going to be above the consensus. It's going to be much hotter than what the expectations are. Richard, no, come on. I can't let you guys do that. Come on. So anyway, we're going to jump live here as soon as this thing starts going. I'll do an audio check. So hotter in October due to energy is my bet. I think we're safe this month. That's a fair assumption, because energy prices in the month of August were only up 3.5%. So I don't expect a huge increase in energy. We're going to reload this page in about 2 minutes as soon as the inflation numbers come out. Asim, yes, live in Dubai. Please let Tesla jump another 10%. Yeah, that was a crazy day, right? 10% for Tesla was wild. Oh, CNBC is sure taking their sweet time here. 30 seconds. 30 seconds. So much for being live here on CNBC. It's just crazy. They're still on break. Anyway, market's starting to show us some signs of a negative. There we go.
Futures ahead of the August CPI data, just barely in the red at this point. Just 14 points, 13 points on the Dow. NASDAQ down about 5 or 6 points. I'm going to get to Rick Santelli standing by at the CME in Chicago with the main event. Rick, the numbers, please.
Yes, the main event, the Consumer Price Index for the month of August. Headline expected up an aggressive 0.6, and the economists and analysts delivered up 0.6, up 0.6. The last time we had up 0.6 on a month over month was going way back. You have to go all the way back to February of 2022 to find a bigger number when it was up 0.7. Actually, in March, it was up as well. So now if we consider that the high water mark here in 2005 was up 1.2, yes, we've made progress, but this follows up 0.2%. Strip out food and energy, up 0.3%. Year over year, up 3.7%. That is hotter than expected, hotter than the rearview mirror, and 3.7, the last time we were anywhere near there was up 4% in May. And if we look at year over year core, which in my opinion is probably the most important, 4.3%. Now this is interesting. It's down from 4.7, exactly as expected at 4.3. But once again, let's go through the litany here, okay? We haven't been below 4% in this metric going all the way back to May of 2021. Last year, over half were above 5%. So this is still quite sticky. What has the market done? We've gone from a 431 yield in 10s to a 433 yield. So at 433, we're up a handful on the session. You can see that two-year note yields have moved up to 507, 508. Currently, the high yield close there is 508. These are very important technical levels. And if we consider the pre-opening equities have gone from, as Joe pointed out, down 12, 13, 14 in Dow futures to down 75. Now, if we consider the year-over-year numbers, the 3.7 especially is something to pay close attention to. And, of course, that includes food and energy. But no matter how you slice it, whether you separate those out or not, the Fed committee is certainly not in sync with most Americans or even other economies that don't separate those out, especially at a time where the transition, as ugly as it may get with regard to EV, is one of these sticking points that could keep not only energy and electricity costs higher, but all the cottage industries associated with the transitioning and the auto industry. Joe and the panel, back to you.
All right, Rick, stay with us. For more on the new data, let's bring in Michael Strain, Director of Economic Studies at the American Enterprise Institute. What'd you say? I'm sorry. Emily Gee, Senior Vice President for Inclusive Growth at the Center for American Progress, and our own Senior Economics Reporter, Steve Leisman. Steve, we'll go to you first. It's weird, isn't it? Everything, economists did a pretty good job of forecasting, but it still doesn't kind of causing a little agita.
Yeah, I mean, look, I kind of see good news in this, Joe, and, you know, people can throw things at me if they like, but the thing that stands out to me, I just want to double check this. Owner's equivalent rent came down again, just double checking that. Just want to get the number right, but we were at, I think 0.4 is the number we have, so that's a help. And when I look outside of the energy complex, Joe, it looks like prices are pretty well contained across the board. And by that, I mean, you did have a pop in airline fares and motor vehicle insurance, which raised transportation services 2%, but medical care services up 0.1%. Some of the other elements in here, used cars fell again 1.2 percentage points. so Rick can go out and get himself another jalopy if he likes. And food at home was pretty well contained at 0.2%. Food away from home, 0.3%. So we're not as yet, and this is why you got to be careful here, seeing a bleed from higher energy services into other prices immediately. There may be other issues down the road. There could be some pop-up in inflation expectations to worry about. But for the moment, the surge we got here is in energy services. And the question becomes whether the Fed finds comfort in the core, which has been coming down. It is a little hotter than expected, as Rick said, but the year-over-year rate has been coming down.
Emily, we just had Sean Fain on. We've been talking all day about where some of this inflation is really, what's the root cause for a lot of it, and some of it is still labor. At the Centers for American Progress, I'm just wondering what you think of the summer of strikes that we're in right now. Are these going to be the low numbers we're seeing now once some of this filters through? Some of the increasing wages that we're seeing. I mean, the UAW is asking for either 40 or 36%. And is that a good thing, do you think?
So I think we have to look at the big picture. We do expect some month-to-month increases or decreases, just like the stock market. But the overall trend does show us that inflation remains moderate. Just for sake of comparison, last year at this time, we were at an 8.3 annual inflation rate. And we are seeing prices for some core consumer goods like chicken and eggs and used cars actually come down in July. But I do think that it's important that we, keep watching the unemployment numbers as well. We're seeing steady and healthy and sustainable growth in jobs, but we'll also, we think that the Fed should proceed with caution as it considers future rate hikes to make sure that we aren't, raising rates too high and possibly sending the economy into recession, which would be the worst thing for workers.
Well, the labor market remains pretty tight. I guess my question was, do you think that we're in danger of having this turn into, inflation is here, I make this, I want this so I can deal with inflation, and then that causes prices to go up, inflation gets, the classic wage price spiral. My question was about 40% wage increases for all the hourly workers at the big three. Is that inflationary in your view?
So we do think that it's important for UAW and the big three to find a common ground and to avert strike. Getting auto workers, working is a key part of our transition to clean energy, and we want to see a just transition to clean energy.
Okay. Michael Strain, you can just talk about whatever you want to talk. What do you think? How are these numbers? Are we in danger of a wage price spiral in your view, Michael?
So I agree with Steve. I'm not overly concerned about the kind of big monthly spike in the headline number. I think we will see some kind of bleed from energy prices into core prices. That takes some time, but again, I'm not excessively concerned about it. If I were the Fed, I would be worried about the core number. If we keep having 0.3% monthly growth in the core CPI, then we're not gonna be on a path back to the Fed's target, and that's just not acceptable. We need to be at a minimum. We need to be on a path back to the target. I don't think we need to be at the target, but we need to be on a path back to the target. If this had come in at 0.2, that would be kind of a long path. We would hit the target sometime in the spring or summer of 2024. But at 0.3, just the way the math works, that's just too high. And so the question then becomes a question of balance of risks, not a balance of risks between do we tighten in November, do we tighten into 2024 and shorten the path down the target? That's kind of what I think we were expecting the question to be before these numbers. Now I think the question is kind of back to where we were several months ago. Do we risk a recession just to put inflation on a path back to the target? And that question I think has a pretty easy answer, and the answer is yes. The Fed needs to get inflation back on a path to its 2% target.
So Rick, we said that the last the hard lifting might be ahead of us in terms of getting down to 2% inflation. Do you think that it seems like when in real estate there's a seller's market?
All right, everyone. So inflation numbers, two accounts coming in hotter than expectations. So headline year over year coming in at 3.7%. By the way, just want to make sure the audio is good. So let me know in the comments if the audio is working fine. And thank you so much, everyone, for joining in. So make sure that you drop a like. If you're just joining in, inflation numbers just came out literally 10 minutes ago. 3.7% is the headline year over year, and core increased by 0.3%, which the other guest at CNBC was talking about, that this is not a sustainable path back down to the Fed's target, because annualized that is going to be a little bit over 3.6%. And right now, year over year, ex food and energy, we're sitting at 4.3. So obviously, we're more than twice the Fed's target, although it is still lower from 4.7% from same time last month. And headline coming in month over month at 0.6%, which again, annualized, it's over 7.2, but year over year, we're still down to 3.7. Now, majority of that gain coming from, well, you may have guessed it, energy. Energy prices were up over 10% for the month of August. So this right here is energy. So this specifically energy commodities, gasoline and fuel oil were all up. So you can see 10.5, 10.6, and 9.1%. And that deflation scenario is starting to kind of fade, because this right here, the negative 4.2, negative 3.3, this was a much higher number, but it's now starting to once again reverse back higher to positive territory. If oil prices keep going higher, well, that's going to be a bit of a problem. And something that Steve Leisman said, I can't remember his last name, but Steve from CNBC also mentioned that this right here, the increase in energy prices, may not have trickled into some of the other parts of the economy, although airline fares specifically were up. So transportation services were up because oil prices were up, right? So a lot of these airline companies, they peg their prices against the fuel cost and the oil prices. So if oil prices go up, obviously airline fares are going to go up. And that's this number right here of 4.9% on a month over month basis. And motor vehicle insurance was also up 2.4%. So transportation services were up 2% on a month over month basis. Now, used car prices were down. So that's something that Tom Lee also mentioned. The used car Manheim Index, which was lower, down 1.2% in the month, and I think year over year it's still lower. There's still deflation happening in used cars. Now, food prices still up 0.2%, but there were some declines in specific items, which is good. But then again, majority of that gains coming from energy, which is why you've had month over month increase 0.6%. Core, when you exclude for energy, only up 0.3%. So the problem, well, I guess it's not really a problem. It's more of a concern with respect to how you kind of spin inflation, right? Core inflation. So if you come take a look at some of these numbers, and this is a good representation of how much of an impact energy has on overall prices. So this is August 2022 to August 2023. This is literally one year of inflation, the last 1 year, 12 months. All items, less food. So if you simply take out food, it is still above the Fed's target, 3.6. If we take out shelter, which is also a bit of a problem, we're at 1.9%. If we take out food and shelter, we're at 1.3, right? So you can see that if you take out shelter prices, immediately it drops down to 1.3%. If you take out food, we're at 1.3. And if you take out food, shelter, and energy, we're at 2.2%. So we're very close to the Fed's target. So the problems, shelter prices, they are slowing down, but not slowing down fast enough. Not fast enough to compensate for the reacceleration in energy prices that we're seeing, which is once again causing some problems on the upside for shelter. And again, food prices are also slowing down. They're not in deflation, they're in disinflation, but they're not slowing down fast enough for us to compensate for the increase in energy prices. Hope that makes sense, because what we had were like, if I were able to draw like 3 different sort of curves, energy dropped faster and more aggressively, and it's on its way back up, and food and shelter is now starting to slow down and starting to come down, but it's not doing that fast enough. So it's staying higher, and energy prices are kind of catching up once again. So which is obviously causing core to increase at a hotter than expected number, and month over month on headline also increasing significantly. So let's just see if we can go over to some charts here on BLS. Let's take a look on CPI. Just want to make sure the audio and everything is good. So, all right, charts. Let's take a look at this. So increasing, right? So going from 3.3% to 3.2 to 3.7 now. So pretty significant increase, reacceleration on the headline. And a lot of that has come from energy. So you can see the last 2 months, it's gone from negative 16.7 to negative 12.5 to now negative 3.6. So it's almost a certainty, and I have no doubt in my mind that now the September report that comes out in October, so 1 month from now, this number is going to be positive. So energy is once again going to be increasing on a year-over-year basis. Right now it's negative 3.6%, which, as unfortunate as it is going to start increasing again. Electricity has been coming down, so that's good. Food prices, as we mentioned, they are slowing down. They're very close to that negative territory. So they are selling off and coming down pretty aggressively, so that's good. But we need to be in deflation in order for food prices to play a bigger role in the overall inflation numbers. And shelter prices, again, they're moderating. They're slowing down, but not fast enough. They're not slowing down fast enough as energy prices are taking off again. So that's where we are. So bottom line is, I mean, when it comes to rate hikes, I don't know. I think the Federal Reserve might look at the core inflation and the fact that energy prices are on their way back higher, which is why, I still do stand firm with my expectations that there is maybe another 25 basis points left for this year. But again, we've got the Fed meeting in 7 days. So the next FOMC meeting is going to be in 7 days on September 20th, and we'll learn more about what the Federal Reserve ends up doing. But I don't know. I just feel like there's maybe another 25 basis points in the pipeline for 2023, just considering that headlines are reaccelerating back up, from 3 to 3.2 to 3.6. And core is coming down, but it's only a matter of time before energy starts playing a bigger role in other services, other products, which also do affect core eventually. One more thing I want to quickly take a look at. So all items list food and energy. This is core, which has been coming down since September of 2022. March of 2022 was the peak, 6.5 and then 6.6%. And then in June, it was at around 5.9%, went up a little bit more and then started coming down. So a little bit after energy prices were already in decline. So a little bit after that. Let me see medical care services. They started in September as well. Okay, so medical care services started in September, same time as all items as food and energy. So core also started in September. And shelter prices have also started to, shelter prices have only started to come down in March of 23 on a year-over-year basis. So still got a little bit of ways to go. Shelter was up. So shelter was up a little bit over 0.3%, I think. So if you come back, see the report, it was up on a month-over-month basis about 0.3%. So August 0.3%, year-over-year 7.3, which again is a little bit higher than the consensus right now. Kevin, you can check that for yourself, buddy. I'm not checking whether men's undergarments were higher or lower. But overall, I think apparel prices were up 0.2% month over month. But there you go, down 4.6%. Go knock yourself out. Go crazy on those deals. And then we've got used car prices. Of course, we already went over, minus 1.2%. So that's an entire breakdown. We don't have to go over that because they play such a small role in the overall CPI basket. So the main headlines are energy, of course, food prices, shelter prices, used car prices, transportation expenses, medical care services, and it was all like up and down. Boba sub with PayPal looks like it's dead. I mean, the stock price definitely has been beaten down quite significantly, but the company not so much. And right now down about 35 basis points. Of course, had a brutal month. In August, down 17% after the earnings. But right now it's just trading sideways, consolidating in that range. And right now it's kind of like in this lower high and lower low wedge at the moment. So Vault asked me a question here. Yes. Are you ready to make some purchases today, or are you gonna wait for the market reaction in September? We'll buy some. I mean, if stocks definitely do sell off, I mean, if PayPal continues to come down, if Enphase comes down, if Amazon comes down, if Tesla keeps selling off, then would love to get more deals and buy more shares. But in 7 days, we've got another big catalyst from the Federal Reserve, and the SEP comes out, the Summary of Economic Projections. So that's going to be even more important than the speech from the Federal Reserve themselves, because it's going to give us the path forward with interest rates. So I'm going to be patient, again, ready with the dry powder whenever opportunities present themselves. So we'll dollar cost average as I see fit and as I see opportunities in the market. But also allocating pretty heavily in emerging markets, and more specifically India. We'll be buying more and more in that market. By the way, Nifty 50 just hit a record, an all-time new high record of over 20,000. So congratulations to everyone. I mentioned this in our Discord earlier, but this is where we are, 20,070 for the Nifty. This is an index of 50 largest companies in India, and hitting a new all-time high. I'm telling you, there's a lot of growth here, a lot of growth. INDA is the one, right now flat, but I wouldn't be surprised if this also kind of creeps up to its all-time highs. It's only 7.5, close to 8% away. What about Oracle? What is their fair value? Alex, I did a video on Oracle. Make sure that you do check that out. I mentioned this specifically that it's trading at a pretty expensive valuation relative to its growth forecast, and it's actually quite surprising that for a software company, they do have a lot of debt. If you come over to their balance sheet, they have over $76 billion worth of debt relative to their cash, like on a net debt basis. So it's actually pretty high for a software company that has good margins. So, and shout out to Frank, because he also commented on the Oracle video and how the company is spending a lot of money on artificial intelligence and they're making a lot of investments. The problem is the capex is also high, right? So if you come over to the annual numbers, their free cash flow has been coming down in the last couple of years. So you can see that they've gone from like $13-14 billion down to 5, and then down to 7 or 8. And if I come over to cash from investing activities, their capital expenditures have just gone crazy. I mean, take a look at this. Last 3 years, it's gone from like 2 billion to 4.5 billion to 8.7 billion. So their capex has increased 4 times in the last 2 years, but the revenue has not. Right? It would make sense if the company's spending, let's say, $8 billion, 4 times more in capex than 2 years ago. You would expect to see a revenue significantly increase, right? I mean, because maybe they're building infrastructure, maybe they're spending a lot of money, investing a lot of in R&D, doing a lot of different projects, taking on a lot of different projects to increase their business, but the return on that investment is not that high. And we also looked at the efficiency of the business, net income per employee, which was also struggling a little bit. So it's a great company, no doubt. Very, very strong, moat. It's got, trading almost at an all-time high. But the couple of concerns I have is the return on invested capital, the balance sheet, the amount of debt for a software company is very high. Valuation is a little bit high relative to its forecasted growth. And technically speaking, the RSI MACD pretty overbought. So I'd be careful with Oracle. So SE, I've done a couple of videos on SE as well, so make sure that you do check them out if you can, please. Need to DCA more into hedge positions. So yep, I mean, there's options out there that you can look into. Twilio, price target for a breakout. So let's take a look. See, now we're getting a lot of participation. I like that. See, when there's a lot of question, there's a lot of analysis. It's a fun live stream, right? Because we can talk about a lot of different things. So if you have any companies, any different stocks you want me to go over, any specific questions, would be happy to do that. But anyway, Twilio here, just mostly consolidating sideways. And 69.70 bucks is going to be that resistance that we shake. And if you do get a breakout above that level, 79 is going to be that next level and that next target to watch. And it does seem like a little bit of a bull flag, so I would definitely pay attention to this huge rally, consolidation sideways, support at 60, resistance 70, or 69.50 to be more precise. And the breakout is going to put us on target of $79, 79.50. Okay, Etsy, yep, so I'll go over Etsy here in just a minute. Let's see, taking PayPal's global dominance consideration, if they ever roll out a feature of other countries to buy crypto with their native currency, that would be something else. I don't agree. I think, PayPal should not get into the crypto business as much as Square has. For what reason? What is the number one reason why I would not want them to get into the crypto business? What do you think? Let's see if anybody can guess. What's the main difference between Square and PayPal? Oh, there you go. Milan got it. Low margins. Yeah, absolutely. So I guess I have to buy some SoFi shares. But yes, it is the margins, right? The reason why the reason why Square is not profitable and PayPal is incredibly profitable is because of majority of the revenue that Square generates comes from Bitcoin revenue. And Bitcoin revenue is a very, very low margin business. Like we're talking 1% or maybe even less. Most of their cost on Bitcoin revenue is like the revenue itself, right? So that's why I would rather have PayPal grow the business organically and get more users to join and start using PayPal, more businesses to join and start using PayPal, because the margins are really high, their free cash flow is very strong, as opposed to jumping into the Bitcoin business. Now, the thing with that is there is one caveat: if they are able to somehow figure out a way to get into crypto, but at the same time have members and users use their other services as well, then the story is different, right? If the project or if the goal would be to get people excited about crypto, start using it, but then also have them use other services, then it's a whole different story. But I don't think Square is able to do that very well. Yes, people are trading crypto on their platforms, but they're not using other services that Square offers, which is why the margins are low. Copart 2-for-1 split on August 22nd, so we'll take a look at that. Workhorse receives IRS approval for commercial clean vehicle credit, up big today. That's great. I mean, Workhorse, what a stock, right? What a company. We'll get to that eventually. Bought some idea myself. That's great. And let's see, Roku technicals, please. 3 now total pending. Competitors. Can PayPal do both? They can, but it's just going to be that margin mix. So when a company has so many different businesses, what we see the margins are the combination of all the different businesses, right? So for example, Amazon's like 3 businesses wrapped in one. 3 would be an understatement, but the main businesses are AWS, advertising, and e-commerce. When you see the margins for Amazon, it's a combination of all 3 businesses put together. Of course, if you were to spin out Amazon advertising and AWS separately, the financials for those companies would be phenomenal, right? Great margins, great profitability, excellent ROI. But with e-commerce, the margins are really low. So, but e-commerce is important and e-commerce is also the beginner, right? It's also the thing that got Amazon to where it is, and it also invited a lot of businesses and individuals to join Amazon's ecosystem. With PayPal, it's different. They don't need the crypto as a marketing initiative to have people join the ecosystem. They're already a very high margin business. What they need to focus on is how to keep growing their user base and how to become more profitable with higher margins. It would be going after a lower margin business model. Okay, so I'm gonna answer some quick questions here. So Workhorse, like I said, I mean, we'll get to that company eventually if it does become profitable. Etsy, I'm gonna quickly go over. And let's see, so it is trading at our support. So inside this green rectangle very much. It did get a breakdown below this level pretty dramatically. It's been selling off for weeks. And it is oversold right now. It is also making some lower highs. So very much in a little bit of a downtrend. And I'll do a fundamental video on Etsy, kind of going over an updated analysis. Looks like they beat on EPS and beat on revenue as well. But we'll take a look at this company. Once again, I'll do an updated analysis. Year-to-date down 46%. It's definitely struggling on a year-to-date basis. And the next support, in case we break down below 64, is unfortunately going to be the pandemic lows down in the 30s. But like I said, I'll do an updated on this company very soon. But right now, at support. Gerald, thanks for the live stream. Caddy, any thoughts on entering into energy now? Has a run-up peaked, or do you see there's more room for further upside? I think from a trade perspective, there might be potential because crude oil prices, I don't think they're stopping here anytime soon. I think crude oil has the potential to go higher. What happened with my energy? There we go. So, right now we're at just under $90 a barrel. with everything that Saudi Arabia and Russia are doing with OPEC plus nations and how they're trying to cut supply, maintain that production level to a certain level, so that prices are elevated, I wouldn't be surprised if it peaks up to $93, $95 or even starts getting in the triple digits once again. So there is upside, but from a risk reward standpoint, it's kind of unfavorable because you're really, the reward's about 13% upside with a potential downside of, about an equivalent 13 to 15%. So it's like a one-to-one trade. So I would be looking into these companies, obviously, but like I said, there's potential upside, but not a lot of upside for oil. And then, of course, who knows long term if the transition to renewable energy and just a lot of different sources of energy doesn't happen as quickly and oil starts to run out, then we just get into this big imbalanced game of demand and supply, and then oil prices can go crazy. And I think that's what Warren Buffett is betting on, buying Occidental Petroleum. He's been going crazy on that stock. But maybe long term, that's what his thesis might be. Okay, what do I use for news? Trying to find the fast source for all financial news. I mean, FinViz has a pretty good news section. So if you go over to FinViz, they've got this news section which updates automatically. So it updates, on a every few minutes. If there's something comes out, you get the latest headlines from lots of different sources like Bloomberg, for example. We got CNBC, Reuters, Yahoo Finance, the Wall Street Journal, Market Watch. So they kind of put together all of it in one place, and you can kind of see and you can reload it, and I think it updates automatically as well. You can see if there's anything that piques your interest, you can click on it and go to that source. But I like FinViz, and I also like CNBC specifically that you can use. So Murch, hey Caddy, I really thank you for the valuable info in your course material, but can you please add the way to count stock volatility beta just in case we need it if it's not available? Yes, so there is a very simple way of doing that. All you have to do is basically use the beta function on Excel, and all you really need is the daily changes of both the S&P 500 and the stock itself. So if you basically want a beta for the last, let's say, 5 years or 3 years or 1 year, you go to Yahoo Finance, you pull down on the stock prices for that stock, every day's close, and the S&P 500. I'll do a tutorial on this. I'll do a video on this, and then you got the percentage changes for both, and then you calculate the beta. So remember, the stock's beta is always relative to the market benchmark, and it's always less than 1, at 1, or more than 1. 1 is the S&P 500, and if the beta of a stock is, let's say, 1.5, then that means it's 50% more volatile than the S&P 500. If it's 0.5, then it's 50% less volatile than the S&P 500. Of course, there's a lot of companies that have betas of 2, 3, 4, 5. That means they're significantly more volatile than the S&P 500. And that's why in the options world, we do look at the beta to understand options pricing in terms of premiums, because higher the volatility, higher the premiums. Okay. Can you get a negative beta? So not quite. What you're talking about is maybe like the correlation coefficient, which is basically how correlated two assets are. In that case, you can get a negative correlation because if one asset moves up, the other one moves down if there is a negative correlation. So that number will be represented by a negative number, right? Negative connotation. But that also swings between -1 and +1. ASML is dropping right now. So yeah, ASML is one of the companies that I do want to buy more of. 614 right now, almost down to sub 600. Yesterday came down to 610. This is the support, intermediate support that I'm watching. But of course, an ideal level would be in the 360s or 350s. I would love to buy more shares at those levels. Milan says, MoneyVest channel is the best news, go nowhere else. Yeah, that's true. Amen. So definitely come here if you want the best, most latest updates and reports on the market. So your thoughts on Palantir? Palantir, I have a buy target at 10.50 or closer to $10. That's where my fair value is. And right now, does seem like a little bit of a head and shoulders. I closed my covered calls on Palantir yesterday, or I think it was the day before. Closed 2 of them. The other 2 I closed, I think, a couple weeks ago for 60% profit, and the ones that I closed yesterday for a 90% profit. And these are all covered calls, right? Taking advantage of the potential sell-off, and that's a way you can hedge your downside. If it does break down below 1375, which I wouldn't be surprised if it does, so this right here is the neckline within this head and shoulders, then the next support is going to be down to 1030, 1050, and that's where I'm going to be very much interested in buying more shares or maybe selling some puts at those levels. So Nima, do you think Enphase would have the same story like PayPal going down $80 to $70 by next year? It's kind of hard to say. I don't expect it to, because Enphase, I do still believe it's a growth company, even though they have seen a bit of a contraction in revenues and earnings this year because of the higher interest rates. But I mean, the growth prospects for Enphase, their technology, and just about any solar stock, the potential is significant, right? There's not a lot of companies, there's not a lot of competition. Fintech is saturated. Fintech is heavily saturated, right? PayPal, of course, had the early mover advantage, but now there's so many companies that can do what PayPal does. The only difference is PayPal is global. Other companies are still concentrated and local. Local to say that, obviously Apple Pay is concentrated in the US. Google Pay is more in other parts of the world outside of the US. Amazon Pay, specifically for Amazon Prime members. PayPal is for everyone, right? Hundreds of millions of users. So, but no, Enphase, I don't believe that. I don't believe it's going to be the case. But yes, 2023, significant underperformance, down 54%. So we'll see what happens next year. So Pergi, thanks, Scotty. Best place to really learn to analyze a company and find a fair value. Come on, really? Really? I mean, I've got a full 40+ lecture course on that fundamental analysis. It basically goes over everything, qualitative and quantitative analysis, and running 3 to 4 different models on Excel, discounted cash flow models. So I basically go over too much detail, calculating your cost of equity, calculating your cost of debt, using the weighted average cost of capital to figure out your discount rate, and then discounting all the free cash flows back to present value to figure out your intrinsic value. And then, of course, doing it using an earnings model, doing it using a price to sales model, price to free cash flow model, and an enterprise value to EBITDA model. So EV over EBITDA. Everything is covered, right? Literally everything you need to know about fundamental analysis is available. Caddy, did you buy your Indian stocks using IBKR US or IBKR India? So I actually bought them using my brokerage account in India. So I actually did not buy them through IBKR, but for European stocks, I will be doing it through IBKR. I will be doing it through Interactive Brokers or IG platform. So that's what I would be using. Yeah, see, ARM comes out today, overpriced already. Would you invest in eVTOLs, ACHR, Joby, EVLT? Do you think they could be big in the next 10 years? So there's a lot of tickers. I'll try to look into at least one. So 1.6 billion. I mean, heavy losses. Electric vertical takeoff and landing aircrafts. I think it's kind of a tough question, because my question is, I guess, because it does fall under the space and aerospace industry, right, sector. And for the most part, these are programs that are not for profit. I mean, these are very much subsidized, right? I mean, so this is an industry, like for example, Virgin Galactic, right? Virgin Galactic is one of the few companies that actually is doing it for profit. They want to let people go into space and charge them for this experience. But when you look at SpaceX and when you look at NASA, when you look at even these companies that are making these electric rockets that can go vertically up and back down, there's no for-profit element to this. In my opinion, I think the reason why they're going public is to raise capital for their investments, their capex, and their infrastructure spending. But what's the for-profit? I mean, they can operate on subsidies given by the government, but there's no for-profit. How are they making revenue is my question. How are these companies going to make revenue? I guess other businesses, other space exploration companies may want to use their technology and they might partner with them, but It's a long shot. Amit, liked your video on 8 ETFs. Please, can you also review FEZ, SPDR, Eurostox 50 ETF? Yes. So thanks so much, Amit. And I highly recommend everyone to watch that video because we go over 8 ETFs that I'm, very excited about. These are ETFs that, in my opinion at least, are worth looking into, definitely worth researching, and potentially even worth owning for the long term because they cover a lot of different geographies, they cover a lot of different themes, and of course a lot of different market dynamics with respect to diversification, concentrated, broad-based, all those different things. So definitely do check that out if you have the time. What's your history, Caddy? How did you get into industry and learn? So I went to school for finance, got a degree in finance, have a bachelor's, a couple of years of experience, and then but been investing since I was 18 years old, so closing in on almost 9 years of investing. So, okay, let's see. If you got $1,000 today and you are told that you have to buy stocks of any one of the companies today itself, no ETFs, which company would you buy? So, great question. Knowing what I know today, just based on the valuations, I would go with either AMD is still a little bit overpriced, but I would love to, because I know that AMD could actually be a big performer in the next 12 months. But then I also think Enphase could be a big performer in the next 12 months. So I would pick something between AMD, Enphase, or even Amazon. Amazon's a little bit overpriced, I think, trading at a bit of a premium. But I don't mind Amazon either. SpaceX, when it goes public and never sell it, but again, like what's the for-profit narrative, Milan? How are they going to make revenue? How is SpaceX going to generate revenue? I'm only talking about the rocket business, not about. I think Starlink is different, right? I think Starlink is different than SpaceX. It's a different company, not part of SpaceX. Correct me if I'm wrong, but send people to the moon. SpaceX taxi. See, that's the point. That's the point that I'm trying to make. For a lot of these space exploration companies, there's no path to revenue even. Forget profitability, there's no path to revenue. It's all based on subsidies and government credits and all those different things. So what's the narrative? What's the thesis there? By launching a MoneyVest satellite. Richard, no, come on, man. I'm not a genius by any means. The one thing that I do recommend everyone is to keep learning. That's my lesson to you, is just keep learning and never really think that you know everything, because there's always something to learn, whether it's from books, videos, podcasts, just keep learning as much as you can. Yeah, every day. I mean, even to this day, I'm learning new things. Learning every things from my community members, from our, people that are part of our Discord. So it's just a amazing experience and super grateful for it. Vault, yeah. So I can read this comment. So your comments are coming through just fine. Donald says, "Got you beat, Caddy, investing since 1977. Are you serious?" Kevin, when did you start investing? I want to know who's the oldest person in our chat right now that has been investing. When did you start investing? What year? I don't know. Kevin says 1992. Wow. Okay, so you have gone through the dot-com bubble, gone through the Great Recession, gone through the COVID crash, of course. Milan says 2015, so 2015, lots of people 2015. Alan says 1977. That's incredible. So that is 46 years, man, closing in on half a decade. Closing in on half a century. That's insane. That's a lot of market cycles. There's a lot of experience from 1977. Richard says, I'm 72 and started investing in 1978. Man, that's incredible. Congratulations. You're closing in on 50 years of investing experience. We should do like an interview style thing where we bring up our subscribers that are invested. Anyone before 1980s, we should just have them all come up and just share their lessons. Share what is the one lesson that you've learned investing over 50 years. That'd be a nice video. We could have Alan, Richard, everybody come on board and just talk about it. So 2021, Justin says. 2023, Eric, welcome to the market, man. That's great. 1986, 1999. Oh, what a time to be alive. What a time to actually get into the market, Iceman. 1785. Come on, Haas. Yeah, you ruled me out before. With 80s, most of us were born before that. Yeah, no, that's true, and that's the whole point, because we want to ask from people that have been investing for over 50 years, right? So, and then we'll do like something for 25 years, then 10 years, and then something for newcomers, right? Beginners that are just getting started. What is their expectations? I think it'll be a good video. Just kind of asking different experienced people. Anyway, let's see. I think Oracle has a big problem. I'm in the IT industry for 16 years now. I've been using Oracle products, mostly databases, and they overslept the rise of cloud, and they did not evolve through their production. I still think that it's got a huge competitive advantage. Of course, it kind of competes with AWS, Azure, and Google Cloud on that front, but I think they still have pretty significant moat. Of course, time will tell, how things change. And one of the things that I mentioned in the comments for that Oracle video also was all the stories we create around stocks, right? All the qualitative analysis, everything that we talk about for any company, right? When it comes to the story, the qualitative analysis, oh, Tesla can do the dojo, Tesla can do autonomous driving, right? Oracle can do AI, or NVIDIA can do these GPUs for artificial intelligence. All the stories that are created, the qualitative analysis, eventually will go one place. Where? What's that one place where all these stories eventually end up? So let me see. Let me see who has the answer to this. It's a very thought-provoking question, but hopefully you guys can answer this. And remember last year we were talking about Meta. Oh, Meta is dead, right? Meta's dead because users are going down, right? Who even uses Meta? Like all these stories, all the qualitative analysis, it all ends up in one place. Brother says goes to garbage. No, it all ends up in one place, which is where? Brian says revenue. Yes, the numbers. Right? It all ends up in the company's numbers, the fundamental analysis of the quantitative side, which is the numbers. So if PayPal is as strong as we believe it is, if PayPal is, a company that is still doing well, the numbers will show that. If NVIDIA is as good as we think it is with artificial intelligence and GPUs and sales and, partnerships and everything, the numbers will show that. If Tesla can actually achieve supercomputers, full autonomous driving, network satellites, everything, the numbers will show that. Numbers will tell you the whole story. And it will basically, they will never lie, right? The numbers don't lie. So with every qualitative analysis, there's a gap, right? Because the story only tells you so much. The numbers tell you the full story. And that's the thing, right? The middle gap between the qualitative analysis and quantitative is execution. That's what connects both qualitative analysis and quantitative analysis. Richard says, yes, numbers don't lie. All right, so market's going to open in about 12 minutes here. A quick update. Still muted reaction. It almost as it feels like the CPI numbers didn't even come out. So we got SPY just down about 8 basis points. We got the QQQs down about 8 basis points as well. Yep, and then the Dow Jones is down about 6 basis points. Yields, they were higher, then they were back down, and we're sitting at 4.3 now. Only Jim Cramer does. Talking for a little bit over an hour now. So Edward, not invested in the UK just yet, but we'll be doing that very soon as I'm in the process of starting a new account with Interactive Brokers. So as soon as I do that, I will definitely alert everyone in the Discord. I do have plans of buying some European stocks, whether it's in the UK or the Netherlands or German markets or Italian markets, even French markets. I think there's a few companies that are very, very attractive in those areas. Oh man, I can never get enough of Jim Cramer memes. It's just, you can never get enough. We gotta get some market memes going here in the Discord because I definitely get a good laugh looking at some memes in the market. So Ashok Leyland, is it a good company, an Indian company? I haven't looked at it. I haven't looked at that company, but I'll definitely see if I can do an analysis on that. IQE on the London Stock Exchange. We'll take a look at that. How's life in Dubai? Did you have any fun experiences after moving there? No, it's good. It's good. Not anything fun experiences, but just been following a decent routine every day. And that's really what it is. So, but I like it here. It's good. The only thing is the weather, because Dubai is like 1,700 miles away from the equator. So it's literally about as close as it gets. And we get direct sunlight. So I literally just have to put on so much sunscreen before I leave. But it's really, really hot. But everything else is perfect. Everything else is amazing. So I love it. Anyway, Apple here up over 0.5%. Tesla up 79 basis points. Nvidia down about 0.5%. And Microsoft here down about 8 basis points as well. Nisarg, do you feel like some of the new generation investors look at more technical analysis rather than looking at fundamentals? I think it really depends on what they're trying to accomplish. So I don't want to put the new generation in one single bucket, that they're only focusing on technicals and not on fundamentals. I think it just depends on what their goals are. And yes, I know that trading in general can be a little bit more sexy than investing long term, because as what Warren Buffett does is very boring, right? And I think it was his quote that he was asked, what you do is so easy to, and you can get rich in the long term, like why don't a lot of people follow you? And he basically says that it's boring, or something like, it takes a long time, right? Not many people have the patience to do that. So I think it says a little bit more about the behavior of how we're wired. We always want that instant gratification, right? We want to see the results right away, instead of just kind of waiting it out and being patient for the long term. I actually saw a video today, which was one of the best quotes I've heard in a very long time. And it was a quote from Usain Bolt, and he said that I trained 4 years. So I worked my ass off for 4 years. I trained for 4 years only to run 9 seconds, right? And people quit, if they don't see the results in a few weeks or a few months. So it really depends, what they're trying to accomplish. If investing is your goal, you have to understand that it takes time, right? It takes a lot of patience, a lot of consistency, following a process, following a system which works for you. But then, of course, if you're trading, then your focus is very much on technical analysis, and you are looking to, generate returns every day. You basically eat what you kill every day in the markets. That's how it goes. And there's nothing wrong with being balanced. If you want to invest. If you want to trade, you can do that as well. But just be very clear in your expectations. Addy says, Warren Buffett's style is too boring. 0 dares, still expiration options the way to go. Oh, man. Yeah, Match. I think that's fully understandable, and that's how I've got it set up as well. Long-term stocks, long-term investments, ETFs, and index funds, while also being more active and trading. Edward, how would you take on an apprentice? My son is 18 and starting university, taking up finance. I just thought he can learn a lot from you. You know what? We're thinking about starting not really an apprentice program, but something that's more geared towards younger people in our Discord, um, for parents and for people who can guide their children for investing as well. Get them more excited and share tips and strategies on how to get them excited about investing in finance. So that's something that we may start, which he's more than welcome to be a part of and learn from our community members. But I would love to do that, honestly, but it's just time wise, it's a little bit of a constraint, but eventually, definitely I would love to, and I would be very much open to it. But like I said, in our Discord, we're planning to start something like that, which everyone can share tips and strategies, especially parents can talk about it and things that they can do to get their kids more excited about investing. Thank you, Edward. Appreciate you very much. Okay, so 5 more minutes until market opens here, and no change, no moves happening in the markets. What is going on? CPI has been such a dud. Walmart cash secured put. Yeah, Dubai does have a lot of expats, no doubt. So cash secured put, not really, David, because you definitely want to be selling a put when the price is going down. That's when you get most premiums. And Walmart has just literally hit a new all-time high at 164.93, right? So this is usually a time to be selling calls because you're taking advantage of the higher premiums, because guess what? When prices are going up, more and more investors want to buy calls because they're expecting prices to keep going higher. And so you get a higher premium as opposed to selling a put. And then selling a put, your strike price is a combination of your analysis of delta and then also your understanding of the fair value. So it's going to be finding that balance, finding that sweet spot for that strike price, which we've covered in a lot of detail in our options course. But it's teach kids to go to Dubai when they got money, when that money starts coming in, so they're not paying taxes. Nima, can you please explain when it would be a good time to sell puts? Cash good puts, is it when the stocks are going down? Yes, exactly right. When the prices are going down, because that's when you get most bang for your buck, right? Because you are locking in your capital, and you want to do that when prices are down, when you want to buy them at a lower price, and premiums are high. You can still do it on the way up. It's just the return on collateral is not going to be that high, and it depends very much on your fair value, right? Like I said, your strike price is really a big key determining factor of your return on collateral, right? So if you believe that 164 is undervalued for Walmart, by all means, you can sell an at the money put and get a very high premium and still be assigned shares and be happy with it because you believe this is undervalued. But if you believe that $130 or $100 is more reasonable for Walmart, then of course you want to wait for the prices to come down and then sell a put. Like for example, Enphase. Enphase has very nice premiums right now because the price has been selling off. More and more people are buying puts because they believe the price is going to keep going down. And as a seller, I want that. I want more and more people to be bidding up the put premiums so that I can get higher premiums as a seller. So Donald says, Scotty, when I started investing in 1977, the Dow Jones was 777. Wow. That's crazy. 777, and now it's at almost 30,000, 35,000. That's crazy. That's incredible, right? Yeah. Thoughts on CVS? So I did a video on Walgreens, and we also talked about CVS in that video. Better management, better company in terms of the revenue breakdown, the mix overall. But of course, it's underperformed this year, the entire sector, I would say the retail sector, and of course, pharmaceutical chains have also underperformed. It's down over 23% year to date, but it is a high quality name. It's got, at least compared to Walmart, definitely does look a lot better. Revenues are consistently growing, so I like CVS. But I need to do an updated analysis to see where the fair value ends up being for this company. 3.4% is the dividend yield, so that's pretty good. And resistance is going to be all the way up to $77. All right, so markets are open, everyone. We've got S&P sitting at just over 4,400. We've got the NASDAQ a little bit over 13,000. It's going to open at 13,775, around those levels. And the Dow Jones also is opened at just under 34,700. So very, very flat start to the day. We'll see which direction the markets kind of shift intraday. But Tesla's green, Meta's slightly higher. We got Microsoft, Netflix, Apple pushing up, and everything else is either flat or down. Roblox definitely selling off quite a bit. We got NEO down 2.7%. And yeah, very, very flat day. But that's going to be it for everyone today. Thank you so much for joining in. I wanted to stay with you guys until market open. But bottom line is inflation numbers mostly up on a year-over-year basis and, of course, month-over-month on the back of energy prices. That's the big thing to pay attention to is crude oil. Starting to pull back a little bit, but still at almost $89 a barrel. And if you, of course, continue to see that upward pressure in crude, that's going to be a problematic situation for inflation eventually. But thank you so much for joining. Happy to have you guys on this CPI live stream. It's been a long one, but appreciate you all. Make sure that you drop a like, subscribe to the channel. And again, links are going to be down below for our Patreon, Discord. You know, that gives you access to all the members-only private videos, buy and sell alerts. Everything's going to be included, as well as the intrinsic value spreadsheets and our community Discord as well, where we are talking about memes, market gains, losses, of course, stocks, fundamental technical analysis, and macroeconomics. So thank you so much for joining. Happy investing. I'll see you all in the next video. Take care.